Welcome to the market recap presented by Tackle Trading. Get in the game.
All right, let's see. Testing one more time. How was that? Whitney, Ed, anybody got me? just a little ahead of you guys. I'll give you just a moment. Okay, Whitney, there you go. I don't even want to tell you why you couldn't hear me. It's embarrassing to say the least. So thank you, Jake. Yeah, I couldn't figure out what the heck. Why wouldn't it be on? I had a little issue with my headset earlier, but thought that was ironed out. Well, good deal. Good deal. Well, we will try again then. Thank you guys for pointing that out. And if you haven't figured it out already, I am not a technological genius by any stretch. So exactly, I hit the mute button. I came in early, make sure everything was up and running, and then the mute button got the better of me. Usually I do it on my headset. So, all right, well, hey, let's try again here. Why don't we? So, yeah, if I actually wasn't used to things like this happening to me with technology all the time, I'd be embarrassed. Now it's just, you guys know me, so I don't feel so bad. So we were talking about earnings just to kind of start us off. A lot of the retail companies are coming out here tonight and tomorrow on the open. Here we have the handful of companies coming tomorrow. We had Urban Outfitters and LB come out this afternoon. But we have things like Target and Kohl's and Ross and TJX. So quite a few retail companies coming out before tomorrow's open. That's really kind of what this week is on the earnings front on a short week. Definitely earnings heavy, or retail heavy over in earnings. And so taking a look at our indexes once again. So here we have the S&P 500. And after, I think last week, we kind of breached that support level and then really kind of rallied up off of it on Thursday, kind of making this, kind of looking like it had held. But I think as we look at today's price action, we can clearly say that we did not hold. I think we can clearly say that we did break that support level. We didn't take out the low. That's kind of the last line of defense on the S&P 500. But now all of a sudden we're showing a little bit of changing in the momentum as buyers were willing to buy off of that support. Again, let's see how we react to that tomorrow. But really, I think we have to call that a close below support. I know I'm calling it a close below support. I'll be keeping an eye around 26.75, kind of as that last line of defense, if you will, because once we get past that, there's just nothing to hold us up. And we saw that exact thing happen over in the NASDAQ. And of course, that's how it played out here today, where it just didn't have a last line of defense until that support. And of course, once the selling started, we got hammered in the NASDAQ today, down over 3% on the day, closing below the bodies of these of this little support zone that we put in. We have the shadow or the wick or the tail, whatever you like to call things, kind of as the last line here. That's something, and I do think we should always respect where we've seen price move before. But I certainly would have liked to see it try to hold up on that body. If that kind of falters, there's really not, at least in my opinion, there's not a lot to hold the NASDAQ up until we get down into the 6,400 range, which is quite a ways away. I wouldn't want to be bullish in the NASDAQ right now. Of course, this is an area, the index, as we've kind of been ranking them together over the last little while. We've kind of been a little more bearish on the NASDAQ and the Russell, than the other indexes. And at least today, I'm glad that's the case, because it got ugly really quick in the NASDAQ here today. FANG stocks are doing very poorly, and just tech, NVIDIA continuing to fall. Pretty rough day for technology. The Dow held up a little bit better. And I guess, it's all relative. But the key thing that I'm taking out of today in the Dow is, not necessarily relative strength. It's that it's the only index that clearly has not breached or broken support. That little pattern that people were, talking about, a week and a half ago, a potential reversal type of pattern. Well, we still held up on that support side of things. And we may not have faith that's going to hold up much longer. That's fine. But at least as of right now, we can all clearly say that, yeah, that support is still working for the Dow. This continues to be one of those more relatively strong areas. Boeing's really been taking it on the chin lately. That's been, not doing it any services. Who knows what it might look like if Boeing, hadn't been, performing so poorly. But that support level does continue to hold. I do think that's what we continue to monitor. If we kind of think about, where this hypothetical break of this support level leads us, all of a sudden, pretty much all the lines of defense until we get back to the lows down here are gone. And that's what's kind of scary if you're bullish on the market is, this was kind of where we were mid last week. Now it's kind of even more dire. bulls better step in if they want to try to get this thing turned around, because really, if this doesn't hold, why not 24.4 or thereabouts? I wouldn't buy it until that point, for a potential double bottom. At least then I'd have hypothetical, maybe it is going to double bottom if it breaks. We'll see how it goes. I mean, we have to respect that it's held through some pretty dire, price movement today. So that does, gives us something. Over on the Russell, again, continues to struggle. It's just one of those areas that really technically was probably the cleanest bearish chart over the last little while. Really, once the selling started, no surprise that it got right in on the action, closing right at the lows that we put in last week. Again, kind of thinking about that last line of defense from a bullish or buying perspective. This could be a place where if I'm a buyer, price, and I'm not saying I'm going to do this, but the price, it has responded here positively before. So I would have that, and I could put together a trade while I'll buy it and put my stop loss a little bit below it. So kind of that last line of defense, that's not what I'm going to be doing personally. And again, if that falters, this will be an area that I think kind of shaped up for, again, while everything's kind of looking pretty rough, except for the Dow, which haven't broke support, but of course we could plan on that happening. And if it doesn't, well, no big deal. But I do kind of think that I still lean towards, from a bearish perspective, the Russell and the NASDAQ being the better places, to be as a bear than the S&P, broadly speaking. Although there is definitely signs of weakness there, there's no doubt. And of course, the Dow, which at least as of right now continues to hold support. But if that fails, again, there's just no real support zone to hold this up. So again, another important day in the market. We have the Dow at an interesting support level. We have the Russell at a support level. We have the NASDAQ kind of, knocking on that door, if you will. Depends on how you define it. We broke the body, but haven't broke the wick type of a deal. Buyers, I said it last week, and I'm going to have to say it again. If you don't want this thing to come back to the bottom, you're going to have to step back in. And we'll see if they're willing to do that. I'm not going to hold my breath, but that's why we always do this stuff, right? Prepare either way. Over in the material sector, not terrible, considering the selling that we received. I still overall like the way that this chart looks, better than most areas from a bullish perspective. And I will maintain that as long as we hold support down here. Now, if that breaks, I can immediately see myself liking this the most, or, be on high on the bearish list of things I'd be interested in. So it can really change that quickly for me once this support breaks. If this support were to hypothetically break as we work into the week, and I know we're dealing with a short week, so we'll just have to see how that treats us. But if we were to keep pushing down and then take out that support level, then all of a sudden, everything positive about it technically is just gone, right? I'm not going to assume that's going to happen, but I could easily see a scenario where if that's the way it plays out, there's a lot of room to the downside if that were to falter, just from a pure technical perspective at least. But as of right now, I continue I do actually like this area. I still think that in this market, your cleanest signals are going to be breaking these swings. And everything that we're doing in between is just little trades, which is fine. There's been a lot of great trading opportunities in these ranges for very short-term trades. But for more traditional swing type of trades, for me, we still have to take out these resistance levels. Over in energy, just kind of there. It was one of those days where it really just didn't do anything. Not up, not down. Basically, we're smack dab in the middle of this whole trading range. We're now working into some of these short-term falling moving averages that I would expect to put some pressure on it. So, we'll either push through them, kind of giving a little bit of a short-term, signal that we're maybe thinking about working our way back up towards resistance, or we'll get pushed down from them. Again, it's a challenge to break through them and work back towards that support level. Keep an eye on the little 2-day floor. It's built over the last couple of trading days. We've put both a little bit of a floor and a little bit of a ceiling. Let's see how it responds when it comes out either way of that. It may decide to hang out there with the short holiday week. I don't know. But, I do like that we kind of put together a 2-day little floor and ceiling, but we're really kind of smack dab in the middle of support and resistance within that sector, in my mind at least. Over in financials, again, another one of those areas that held up well today. Regardless of your opinion or my opinion of financials or energy, these areas did hold up better today, through a lot of selling. And so that's, you got to give them some credit for that, right? Not really anything has changed from a technical point of view. Again, kind of like the materials sector, this is one of the areas that I tend to like more as a potential bullish area, and will continue to feel that way as long as we hold this 26 down through here, the support level, kind of lining up pretty nicely with the trend as we move forward. But really, nothing interesting happened. In a day of selling, the most interesting we can say is you held up financials. And again, I'll look at that as a little bit of a positive personally. Over in industrials, kind of working back down towards that low. Again, talking about last line of defense, if we take out this little support that's built up over the last week or so, this is one of those areas that didn't break resistance, didn't put in a higher low or anything like that, right? So if we take out these lows that we put in over the last week as a support level, not a lot to hold us up until we get back towards this last swing down here. So I'll be keeping an eye on that. If that breaks, I will expect more downward movement within the industrial sector personally. Tech, oh man, ugly. It broke the body and then it closed kind of basically right at the wick. It was rough on tech today. I don't think you can really say anything other than that, when we look specifically at tech, we're seeing lots of bearish signals. I have a hard time seeing how we could come up with any really great argument to buy it from a technical point of view. I think you have to look at it as a potential breakdown. That doesn't necessarily mean we're trading, the ETF or anything like that tomorrow, or maybe even tech stocks in general. But I think we can be looking towards those things potentially very bearish signal over there, in my opinion. Staples wanted to run and just couldn't, whether it was too much pressure on the sell side today or just, people are getting a little too excited, much like Friday, jumped in, ran it up early and kind of sold off of those highs. Really, I don't think anything to see here. I think really when we think about this from a technical point of view, as long as we hold up, the breakout point and this little swing that we put in last Thursday, that we can continue to look at this sector through bearish eyes. At least that's how I will continue to be looking at it. Just the pullback wasn't going to be fast this time, right? Who knew, right? Nobody knows the future, but it wasn't going to be one of those, here's our hammer, here's a giant green candle, here's another giant green candle and your resistance, right? As much as maybe the buyers wanted that to be the case, I'm sure, not the way it is. But really, as long as we hold here, at least as the way it looks right now, I will continue to be looking at this sector through bullish eyes personally. Over in the utilities, another one of those, do you want to call it a break or do you not want to call it a break days? We did close above kind of that 55 area, but kind of below some of these tails or wicks that we've seen as of late. For me, again, I've just seen this too many times. Tomorrow is going to be the day. I thought about things today as I was watching utilities, pushing through. And I do think, individual stocks can be interesting, but looking at the sector ETF, we've just seen this forever, right? I think the whole time we've been doing the recap together, it's been trying to break out at 55 or 55.50. And hey, we did get a close. And so that is, a nice positive candle, but we saw it back here and no follow through. We saw it back here and no follow through. So let's see if we can actually get the follow through. At least that's what it has to do for me. I can't trust that means anything after the way it's been, behaving as of late. But certainly a bullish signal. Again, let's see if we can get momentum. Both the last two times that we've tried, it didn't even come close to continuing that momentum the next morning, right? It gapped down on both occasions. So it'll be interesting to see what we do over there. Healthcare did get in on the selling. Again, not super dramatic, but definitely enough to notice within this sector. Much like the Dow, it does continue to hold this pattern. And so I do continue to think it is showing more technical strength in other areas personally, and will continue to feel that way as long as we hold $89. I'm no surprise that we kind of struggled at the 50, and then you kind of add on how much selling was going on from a broad perspective. I don't really think there's much to see here. Again, for me personally, while I'm open to trading stocks within that sector, I really think the signal to want to be doing that is the break, and I don't really mind if it takes, another. Honestly, I prefer it didn't happen this week with the short week and the holiday. I just assume it just kind of, went back and forth this week, So that's what I'm asking for Thanksgiving. We'll see if I get it. But continue to watch that 92 as kind of a resistance zone, a pretty important price if we ever get there. Discretionary, much like tech, I mean, it really had a rough go of things, taking out the low that we kind of put in again. We breached it on Thursday, but rallied up, did put in a close, held it on Friday, and of course, clearly gave it up here today, even taking out the very bottom of Thursday here today. That really didn't get in our way at all. Christmas rally, well, we got a ways to go before you break any resistance, discretionary sector. So, and you're running out of time, right? You don't have much time for that, hypothetical Christmas or Santa Claus rally to show up. Again, we've got a lot of companies in this sector reporting earnings this week. So, hopefully as we go into next week, we'll have a little bit more clarity within this area, but really not a lot. We've got some support, a ways to go, but showing a lot of relative weakness in at least technically right now in my mind. And over in the real estate, nice little run, continued Friday's momentum. Came fairly close to the top before selling off on the intraday, kind of closing there in the middle. Really not much has changed. This continues to be an area that people are willing to put money into. We know that 34 area has been a big deal before. And so we'll definitely want to keep an eye on it as it tries to work up into that area. But I think right now this is, we're definitely one of those bullish type of sectors that, at least for me, I'm not really looking for bearish opportunities. It's either waiting for a better bullish opportunity or looking for a bullish opportunity. And then on the flip side, we have our communication services, which I think you're either, I'm either looking for a bearish opportunity or no opportunity. We've, seen Facebook and Google, Netflix, all these guys really been struggling as of late and certainly had a rough day today. I think all of them closed down over 5%, if I'm not mistaken. So all of them sold pretty heavily today. Broke down below the body, kind of like that NASDAQ chart where we did cleanly close below the body of the candlesticks but not the wick. And it's that age-old, how do you define a break? I think we can safely say that this is still a pretty bearish chart, regardless of how you or I independently would call that. It's pretty bearish looking right now in the communication service. And then really, as you look at the weakness in the things like Facebook and Google and Netflix, it's hard to see this being one of those areas that turns around quickly. I mean, anything's possible, right? No one knows the future, but you see how weak and bad those guys have been performing as of late. It's hard to see this being one of those areas that, yes, bottoms and just screams right up the charts. Anything's possible, but I can't see that happening. As we look at our metals, kind of just a continuation day, nothing too dramatic over in our metals, specifically gold here, pushing up a little bit. Of course, we kind of worked back into that range late last week. And really, I think that's, at least for me, that's how I'm treating it. This was a failed breakdown and no huge deal, nothing big there. But we're back within this sideways range. We could also argue that maybe we need to widen the range, whereas maybe a couple of weeks ago we were looking at the sideways range from here to here. Now I think you could at least make an argument. I believe Coach Matt is that basically you're sideways anywhere in between here. And I would get that. And I really think that the good signal, again, intraday, there can be definitely some interesting trades that develop, within any market, certainly within gold. But I think the swing signal is going to be a clean break one way or the other. As we looked last week on that weekly chart, it actually kind of looks interesting if we ever hypothetically do break out of that 1240, area of resistance, because we'll put in a higher low and by virtue of breaking that, a higher high. So I do think that is interesting, but I don't think it's probably, interesting this week for me. Again, I don't know the future. Maybe we're breaking 1240 tomorrow, in which case it'll happen one day and I'm just waving at it probably. But really same thing over in silver. Not quite as strong as a day, but really we've kind of, I think now people can kind of look at these metals as we've worked back into the trading ranges. At least that's kind of the sense that I'm getting as I'm talking to different people. That's certainly the sense that I have personally, that we basically worked back into these trading ranges. What could have been a breakdown was a failed breakdown. And at least, until we, get some clear, breakage one way or another, I think for me, that's how I will be looking at these things. Over on the dollar, we broke the trend, the line. Of course, we closed there on Friday. We broke that and basically kind of ran right down just north of $96 and kind of caught our footing there. To me, that's a very important line in the sand. Now, I wouldn't personally say I'm bearish if that breaks, But I can understand, and maybe even open to it myself, looking for buying opportunities. I can't see that happening tomorrow, really, but looking for buying opportunities as long as that 96 holds. If that fails, though, at the very least, I'm going to say I have a neutral outlook on the dollar if that breaks. We've taken out the trend. We failed the 97 breakout, but it's not a huge deal. I mean, obviously, you want to see it hold any breakout, but fair enough. Didn't hold the trend line, but if we take out that swing low, and again, we could look at this tail down here, but that's going to line up with the 50. We know that can be an area that can cause a little bit of shift in momentum. We really just know at 96, that nice round number, we saw it happen on many occasions, right? So I think for me, at least, 96 is the line in the sand to remain bullish on the dollar. If that breaks, I don't think I would say I'm bearish at that point in time, but I would definitely have a neutral outlook on it personally if that were to happen. Natural gas gapped open again to start the week, and a very back and forth day as it continues to be very strong. If you look at its kind of intraday action, we gapped up, on the Sunday open and really kind of went back and forth as the day progressed. So not a lot of real movement, and I mean, there definitely was movement on the intraday, right? But not a lot of any, trend changing movement or anything like that. We can kind of continue to watch it. I mean, ideally, from a swing trading point of view, this has been fairly difficult unless we've been using short time frames or being super aggressive, right? Just with how fast it's been moving. I wouldn't mind seeing it have another week of consolidation and then breaking, 480. That would be nice. That's what I would like to have happen. Of course, we could also see a pullback. But really, I mean, as far as, tomorrow, I don't see any great trading opportunities on a daily time frame on this chart. But overall, I mean, we clearly are very strong. And things are going to have to change fairly dramatically for us to probably change our opinions on that as traders, just because it has so much momentum behind it right now. And crude, kind of a day where we did see some back and forth, did sell off, basically coming back almost all the way back down to support and then rallying off nicely. It did rally off with that, that swing low, pretty nice. Have to give it credit where it's due. To me, this still best case scenario, I guess, back up here, I could see it, potential buy signal where we start, breaking back above some of these short-term averages, taking out that trend line, things like that. I really have a hard time seeing any bullish, trading opportunities on daily time frame developing in the short term, at least on crude. It's just taking 5, gun to my head, I would think it's more likely to break to the downside than break to the upside. Thankfully, as I said before, no one will ever have a gun to my head when I'm trading. At least I certainly hope not. But we'll continue to monitor. I think these are kind of the price areas that you do want to be looking at around, that 58 up on the top. It would be, again, we saw it. It just happened really fast. We got exactly what we wanted, ran up to 58 and sold off. It just happened very, very quickly. When you think about it, we went from, hitting 58 on Friday and getting back to support on Monday. It just happened very, very quickly is all. So it didn't have a really great opportunity to kind of line up for a textbook type of a swing trade. But I do think we know where those important numbers are. And I think we probably are looking at this, if we're bullish, we're waiting for whatever our own personal signals are. If we're bearish, we're going to let it do what it needs to within this range that it's kind of starting to develop and watch for it to break or at least get to the top of the range before we look to do anything. So, I mean, it was rough, guys. It was definitely a rough day in the market, a lot of selling, but some areas, holding up, financial held up very nicely. Real estate able to close in the green, staples held up nicely. Energy is maybe, as much as I don't want to admit it, it stayed, it held up pretty nicely. But really, I mean, the weakness was in tech. It was in the communication services. It was in the industrials. We definitely saw some signs of weakness. I think, again, tomorrow is going to be an interesting day because we're, kind of at the last, we've already broken a lot, right? A lot of the things that people were looking at from a bullish perspective to hold this thing up are gone. But we still have some of them left. But they are right there. It's got to hold or it's going to be taken away too. And then all of a sudden, if all the reasons that, the bulls are kind of hanging their hat that this is going to rally, well, we're going to have to lower those numbers, right? Well, when the Dow gets back down to that bottom point, then we'll do it. So that, ladies and gentlemen, will do it for today's market recap. But thanks for bearing with me. And thanks for letting me know my mic wasn't on. I guess, I didn't catch it for like 3 minutes, but 3 minutes is so much better than 30. So as always, guys, I certainly do appreciate everybody's time. Thank you so much for joining me. Be sure to subscribe to the channel and hit the notification bell if you haven't already. And be sure to follow us over at Tackle Trading on Twitter as well. If you enjoyed the market recap, whether subtitled or with voiceover, it's always helpful if you give us a like to let us know that we're on the right track. With that, ladies and gentlemen, thank you so much, guys. Thank you, Whitney. Thanks for everybody joining me today. You guys have a great afternoon. Happy trading, and I will see you in the next one.